What's going on? Today is Friday, the 5th of April, 2024, and it's going to be a quick one today, hopefully. I already went ahead and opened a new bull trap this time in my futures account, this orange account here, and it's in the same 105-day window here as the bear trap. So when I opened this morning, it was the IV had spiked pretty high. Let's see. I guess it's still about the same. 41.3. It was at 41.8 when I opened it. And yeah, I guess the thinking here is, well, there's a couple things. But the first thing is with the bull trap, IV is high right now because the market sold off a little bit, right? When the market goes up, IV almost always goes down. So even if this starts heading up towards these strikes, IV crush is going to come down, maybe 10, down to the 10 level instead of 40. So that will play in my favor. And then obviously time. So as long as this doesn't have a crazy spike up, I'll be good to go. So, and I realized, let's see, back here, I had this loser. I sold a short call a couple months ago. And looking at things today, I realized had I done this same sort of bull trap, that short call probably, I don't know if it would have made me money or not because it got really close, but certainly would have reduced the loss, and potentially on time decay and everything, it potentially could have made me a couple $100, or even if I did the diagonal or the triangle hedge, that could have made me like several $100s. So anyways, I'm going to give that a shot here. Hopefully it'd be nice to get the triangle hedge in place. But even if I end up with just the regular free hedge, like the vertical spread, I'm totally fine with that. And also here, all these combined, I only got a credit of $20.25. So I'm not really making this trade to make money. It's more so that if it goes against me, then it's almost like insurance to the upside, as long as it doesn't go too high, right? Yeah, because even with this 1.5% down yesterday, or almost 1.5%, today it's like we're back up, currently 1.1% up. And at one point we were up at 1.3%, I think. So it's sold off a little bit here in the afternoon, and now currently as we're speaking, it's rebounding again. So I don't know. It's 14:10 right now, so 2:10 p.m. Eastern time. Got almost 2 hours till close. But with all the news and stuff, I mean, everybody was freaking out yesterday during the sell-off, thinking, "Oh, this is bad for the market." But the reality is, we don't want rates to be cut. Like when rates get cut, it means something's wrong. As far as the market's concerned, everything's humming along. I mean, we're all-time highs. Yeah, the rates are relatively high. They're not zero, but they're like 5%, it's like 4 or 5%. That's totally fine. Like, it's so dumb. People are dumb. Like, I've been saying this for months. Like, we actually don't want rates to be cut because that means something's wrong, right? As far as the stock market goes, it'll be interesting to see if this sell-off actually continues. It did not, totally regain the recent highs, obviously, but today's just one day. So I guess time will tell if this just keeps grinding higher. And if it does, come here and look at the curve. This is a trade I opened today here. And, if it stays anywhere here and lower, the max I can make is $20, right? So I'm not trying to make $20, or half of that would be $10. What I'm hoping for is a real slow grind higher, and then it finishes somewhere here above 5,700 to like 5,900, right? And then that would make me at expiration $270. If I eliminate this, well, I don't know, I guess it'll work a little bit different because the trap is so fat, and then the profit tail here is so little. So I guess I'm probably going to have to stay in this longer before I can take off these 2 short calls. But if I did that, let's say I make enough money to cover the difference, then anything above 5,700, I can make 200 bucks, $216 if it closes up there. But what I'd really like to do is do the triangle hedge. And now if it gets above 5,700, come all the way up here to 5,900, I can make $1,100. So that'd be crazy, but we'll see. Obviously this is all low probability stuff. This is, these are the hedges that are low probability, right? So most likely it's just gonna, peter along here and I'll make my 20 bucks, and that'll be it. Right now the market's right around 5,300. For me to make money at expiration, I needed to get up to 57. So that's 400 points. That would be 400 divided by 5,300. That's a gain of 7.5%. I mean, I think right now for the year, we're up around 8.5%, 9% on the year. So in the next, what did I say, 105 days? So that's like just over 3 months. It would have to go up 7.5%. That seems pretty unlikely too. But we'll see. It's kind of just, it's might as well. I don't know. To me, it makes sense to just do it. It seems pretty unlikely we're just going to like skyrocket to the moon. I mean, we're already up like 9%, which over that 9%, we're up 30% roughly since October. And there's been no major pullbacks. Like there's got to be, I don't know if there'll be a pullback, but there's got to be just a breather where we just either grind really slow higher or we just kind of go sideways. Who knows, man? Maybe the market's just going to go straight up until it doubles. So, all right, someone came to the door, so I don't know where I was. I think I was basically done. Anyways, I'm playing this to the upside. It's a bull trap. It's like a really fat bull trap. So, if it stays down here, I basically break even, after fees, even if I get my whole $20 at expiration. So that's kind of a negative because it ties up like $600 or $700 in buying power right now. And if it gets closer, it's going to start using more. But I guess if it gets closer, then in theory, I'm making money. But anyways, so it's kind of a risk to tie up my buying power for that. But yeah, guess we'll just try it out. I mean, I'm basically trying to play the IV crush here. Or, if the market tanks, then maybe I'll just close it out for 10 bucks and call it even and just move on. Use the buying power somewhere else, right? So if I can get $10 out of this and I have to close it for that, that would literally be probably break even. So I'd be fine with that if the market somehow crashed, 10% or something. But anyways, I guess that's it. Activity, what else? So yeah, down here I called it 112-6 bull trap instead of the bear trap, right? So open it today on the 5th and yeah, get the $20.25. It was at the 16, 12, and 4 deltas. So my short deltas are at the 4, right? So in theory, that's like 96% chance that it'll be out of the money. This claims the whole position together has an 86% pop, which makes sense. So IV rank was at 41.8. The market was at 52.87. It's rebounded, oh, wow, about 30 points since then, since I opened this. So it's technically gone against me. And I'm going to aim for the triangle hedge on this one, but I guess we'll just see how everything plays out. And I guess, does this show anything different on the transactions? What are my fees so far? I guess if I add these fees up, And then the projected fees, yeah, my total fees would be $9.34. So if I close this out at the 50%, you know, I'd have to close the whole thing. You know, that get my $10, I would technically come out ahead like 60 cents. So yeah, it does tie up some buying power for sure. And on my small account, maybe I don't want to do that, but I figure it's worth a shot. Figure it's worth a shot at this point. Since I've opened it this morning, you know, I'm down about $6, but that's fine. It's kind of, like I said, I'm kind of just playing the hedge to the upside at this point. So, all right, I feel like I have overtalked a simple transaction to death. So, guess I'm heading out. Have a good weekend, and I'll see you in the next video.